Thank you for joining us at xm.com. Pound and dollar traders will have every reason to eye the upcoming week, which holds the Bank of England meeting as well as US CPIs. I'm Christina Marujos. Helping me unpack this week ahead is our senior investment analyst, Haralambos Pisuros. Haralambos, let's start by looking at the central bank this upcoming week holds. The Bank of England is widely anticipated to hike by another 25 basis points on Thursday as inflation in the United Kingdom remains stubbornly high. So I think the main takeaway will probably be the bank's forward guidance. So what are we likely to hear from policymakers and how could the pound react?
Hello, Christina. Yes, indeed, a 25 basis points hike is almost fully priced in. So any market reaction may come from the statement, the meeting minutes, and the updated economic projections. Now, back in February, when we last got updated projections from the Bank of England, officials projected that CPI inflation would end the first quarter of 2023 at 9.7% year on year and slow to 3% in 12 months. So, with the headline year-over-year CPI rate staying in double digits this March, those projections could be revised up. Even if they don't, and they are left unchanged, they are still projecting above target inflation in a year's time, which may allow investors to continue pricing in more hikes, even if officials repeat the same cautious guidance they delivered last time, namely that further tightening would be required if there is evidence of more persistent price pressures. Now, with the Fed expected to cut rates by around 75 basis points by the end of the year and the Bank of England to deliver at least 2 more quarter-point hikes, the path of least resistance for pound-dollar will likely stay to the upside, even if a reiteration of the prior guidance results in a small setback. What could change the outlook may be a larger than expected slowdown in the first estimate of the UK GDP for the first quarter, which is scheduled to be released on Friday alongside the nation's trade data for March.
Now let's cross into the United States. Earlier this week, Fed Chair Powell said that they will be data dependent regarding the Fed's next move. So could Wednesday's inflation numbers likely spark speculation about a June hike by the Fed? And how could that affect the dollar this week?
To be honest, Christina, I don't believe that if inflation numbers match their forecasts, they will also spark strong speculation about a potential June hike. Yes, the headline rate is expected to have rebounded to 5.2% from 5%, and the core rate to have held steady at 5.6%, but inflation stickiness is already revealed through the ISM and S&P Global PMI surveys for the month of April. And yet, even after Powell refused to close the door to a June hike, investors are still pricing in a 90% probability for no action in June, with the remaining 10% pointing to a quarter-point cut. So, for the pricing to change and start indicating a decent probability for another hike in June, a strong upside surprise in the CPIs may be needed. That could add fuel to the dollar's engines, but I still believe that calling for a bullish reversal in the US dollar may still be premature. In my view, for a full-scale reversal to start being examined, inflation must continue to accelerate, data may need to reveal that the US economy is in a better shape than many are anticipating, and the Fed might need to prove market expectations wrong, either by raising rates in June or by keeping them untouched through and beyond summer.
And Haralambos, before I let you go, what else do we have on this upcoming week's agenda that investors should keep an eye on?
Aussie and Kiwi traders may want to keep an eye on China's trade data due out on Tuesday, as the world's second largest economy is the main trading partner for both Australia and New Zealand. Following this week's disappointing PMIs, weak trade data could add to the notion that after the post-reopening boost, the engines of the Chinese economy are now struggling to gather momentum. And last but not least, the Bank of Japan's Summary of Opinions may be worth paying attention to as well, as this would be the summary concerning the first gathering under Ueda's leadership. At that meeting, officials announced that they will conduct a policy review with a planned time frame of around 1.5 years. The yen tumbled then, as the review's time frame may have raised some speculation that the bank is unlikely to proceed with any changes during that period. However, with no clear clues on when the bank may proceed with another normalization step, traders may dig into the summary to see whether there is still a chance for that to happen before the end of the year.
I see. At Alambus, thanks so much. This was the week ahead here at xm.com.